Understanding all these charts is the biggest dream of every trader out there trying to make profits from trading, and it's still not very clear on the internet what the next move will be. This is understood by reading all these candlesticks. Trust me guys, to understand this, it took me years, but in this video I will share my tips which will help you read charts better. Firstly, it's super important to understand what is a chart. It is a basic representation of price movement in the markets, which is made up of real prices in real time, through which you chart stocks, crypto, commodities, and any other financial assets. And what is the actual purpose of analyzing these charts? This is to help us understand where is the direction of the market headed. This helps us to guess the next move of the market, whether it's to the upside or to the downside. Once you are able to understand this simple move, you can take an advantage to make profits. Now, in order to make money, you have to risk money in trading. In order to make money, there are two simple ways. The first one is through fundamental analysis. Fundamental analysis can be achieved with economic data or news to predict the direction of the market. And the second that I prefer is the technical analysis. Technical analysis helps us predict the next move in the market. Now this can be done by looking at chart patterns, and these patterns happen all the time in the market, which allows us to understand and interpret what's going to happen next in the market. And in order to understand this, we need to know what is the trend of the market. The trend is your best friend. Trend is the most dominant movement in the market, and the best way to understand this is by higher highs and higher lows. Now the way you identify a bullish market is by looking if it's creating higher highs and higher lows heading to the upside. It is absolutely impossible to have a bullish market without these higher highs and higher lows. Now in order to have a bearish market, it must create lower lows and lower highs. Similar to a bullish market, it's impossible to have a bearish market with lower lows and lower highs. Bearish means we look for sells only, and bullish means we look for buys only. Now understanding this will be the key to success in trading. Next is the areas where you enter the trades. There are only few areas on chart which gives us opportunity to enter trades. Now these specific zones can give us buying and selling entries. Once you are able to identify such zones, you can be able to capture the direction of the trend. There are two types of zones. First is the support. What is this support? Support is a floor where prices get to this zone and simply cannot break below and bounces back up, so you are always looking to buy at the support zone. The second zone is the resistance. Resistance is like a roof, so once the price gets through the roof, it simply does not break it, gets rejected and heads to the downside. If you are looking for buys, you have to buy at support, and if you are looking for sells, you have sell at resistance. Now that you have understood trend and key zones, it's time to understand candlesticks. Now candlesticks are constantly repeating in the market without stopping. These candlestick patterns makes a very much sense at these zones. For example, double bottom when formed at a support level will indicate the market is going to head to the upside, and if a head and shoulders patterns occurs at a resistance level, this tells us that price is going to head to the downside. Now these are reversal patterns. Next you have break and retest pattern. Let's say you have a resistance level, the price breaks this resistance, it retests at resistance as a support level to head to the upside. Now let's say you have a support level, the price breaks the level and retests its support as resistance and then heads to the downside. And there are many more such patterns which can be used as reversal pattern to predict what the market is going to do at a resistance or a support level. Now this three things that we discussed in this video is more than enough to make your analysis. So to summarize what we have learned today, the first thing that you have to look is whether the market is bullish or bearish. If the market is bullish, it must be creating higher high and higher low heading to the upside, and if the market is bearish, it must be creating lower low and lower highs heading to the downside. Once you have identified this first step of identifying whether market is moving up or down, you must now find an area of strong support to buy or strong area of resistance to sell. Once you are here at the resistance or support, you are going to apply these candlesticks to find out the reversal, such as double top or bottom, head and shoulders, break and retest. That's all for today's videos, and if you want to find out more about my trading strategy, check out the description and make sure to subscribe for more new videos.